You are looking live at the Russell 2000 index. It's a daily chart, and you can see on the daily that the index made a lower low on Friday when the market was in rally mode, right? Great rally here. The low was 1633. It took out this low of 1641 from October 13th of last year when we thought the bear market had ended, right? And we had a new bull, if you want to term it that way, you can. That's an uptrend, and this is a downtrend, folks. And anyway, it just took out this low here of 1641. So there you go. Lower lows, not a good sign, and it just can't rally up. These little weak little rallies that you can't even call them rallies. I'm going to go to the weekly and just point out that it's been 6 years, and the Russell has gone absolutely nowhere. The bulls might say, oh, it's a good sign, it's a long runway of consolidation. And I would think that, it's going lower. It wants to go lower, so it's going to go lower until it reverses. So we're just looking for a reversal, trying to stay vigilant. I haven't even looked at the monthly chart here yet. It's been a long time here where it hasn't gone anywhere. And so I'm going to turn it over to the Nasdaq because the Russell is a more of a risk on smaller cap stock. So I would look for that to reverse before any of the other indexes. As far as institutions wanting to take risk, I always ask, are the institutions supporting this market? The answer is definitely not. You can see these big pink volume bars, which shows that, institutional selling. And there's no way you should get in front of these institutional sellers. We're just little fleas here in this market, and they move the market. I wanted to point out that the Nasdaq had a follow-through day on October 6th. Now, we've had other follow-through days have failed since July 19th high. And this follow-through day is below the 50, and the moving averages, the short-term moving averages are trading lower. And so I'm really skeptical of a rally in that type of environment, but it did rally up for 3 or 4 days up to its 50 and then got rejected. Tried to rally up again here. These 2 days got rejected and had these 3 inverted hammer candles where it closed near the low of the session. And so it clearly on this day, the 20th, undercut the low of the follow-through day, which is 13,099. This low of the follow-through day was undercut on October 20th at 12,977. That's a red flag. Get the heck out. Adios, muchachos. And give you a couple days here on the 23rd and the 24th where, you could get out and take profits. Even if, you put on a trade recently, you're probably underwater, but even if you've held a stock for a long time, you don't want to see, the profits being eaten up. That's no fun. And you never know how low it's going to go or how long it's going to last. So it's better to preserve your capital. If you're not short, preserve your capital and just wait it out. It made a low here. It just keeps making lower lows of 12,543. Then on Friday had a big rally and had an inside day on Friday. Anyway, the Nasdaq just it's in a downtrend, and the peak to trough here from 16,212 to the last October, it hasn't taken out the October lows of 1088. That's a 38% decline, and it rallied up and now has declined from the 14,446. That's a 12% move here, peak to trough during this, I don't know what you want to call it, a correction or a downtrend on the daily chart. There you can see it. So anyway, like I said, the institutions are selling and you can't fight the trend. S&P, there's a big rally on Friday, right? Making the lower lows. It just wants lower. I mean, if the market's uptrending and they say it's overbought, you want to buy an overbought market. When it's oversold and trending lower, you want to short or stay out of a market that's going lower. It wants lower prices, and it can stay. I hear the term oversold all the time. And what is oversold can become more oversold. You have to wait for a reversal, and we're not seeing that. On the Nasdaq, yes, it would be considered day one of an attempted rally because it was up on this day, but still below the 200. So that is day one. Just want to point that out. Anyway, And undercutting the lows is not a good thing. I'm going to go to the Mag 7 because, they shoot the generals last. And these stocks have been, holding up the market and buoying the indexes. But these things look like they're, this looks a lot like the index under the 200, little inside day. Apple, they report earnings this week on the best day of the year. But that stock is nowhere near a buy. Microsoft, I guess you could call this a double bottom. They reported earnings, good earnings, had a decent response, and just fell out on Thursday, had an inside day on Friday. But I'm not interested in this. Like I say, they shoot the generals last. Google has been shot. They reported earnings and just a horrific move here on Wednesday after the report. Nice 9.5% move, followed through the next day with nearly a 3% move. Then on Friday was down fractionally while the index was fractionally up. But this thing, like I said, they shoot the generals last. Meta reported it got shot below the 50, had a little move up on Friday, but that does not look good to me at all. Below the 50. Amazon, this one looks terrible. Yeah, I know it had a good rally on Friday after an earnings report with volume, but this is below the 50, downtrending, moving averages, short term. It's you can't buy this stuff. Tesla, this one was shot already. Below the 200, it looks like every time it rallies up to the 200 now, it's going to be a short play. I mean, I'm not interested in this one way or the other, but it does not look healthy at all. Below the 200, short-term moving averages, diving, relative strength line, just going nowhere. This is not a healthy stock. NVDA, this thing looks like a head and shoulders top here. There's, a shoulder, there's a head and a shoulder here on the right side. We got a little Gumby shoulder going lower here now, which is what you want to see. It did undercut the low of 403 on Thursday and Friday. It's just it's got no strength. I would just stay away from it. This is not it was 400. It was low on Friday, 398.80 on Thursday. It's just going nowhere, no strength. A couple other stocks that I like that I had to get rid of, and Eli Lilly is one that undercut the 50. This is a really strong stock. They report earnings on the best day of the year also, so we'll see what they say. At least it's not ramping up into earnings. We could say that. NVO sliced its 50 as well, so I got to part ways, even though the relative strength is hanging in there below the 50. I don't like it. They report earnings on the best day of the year as well, so it's going to be a busy day on Thursday. Some other stocks that just want to point out, I don't want to get too gruesome here, but I just want to point out, if you're holding stocks into earnings, it's just gambling here. This is Align Technology. It's just a brutal move on heavy volume, 25%. The CEO said that people aren't going to the dentist anymore. And I went to the dentist and they said, that's not true. We use, this, their technology, but obviously the CEO was pretty negative on the call. Enphase, another one that reported, they reduced revenue expectations by like 50%. Then that's no way to behave. It was down 15% on Friday. Just a brutal move. His running mate, Solar Edge. This is a weekly report too. I'm gonna have to go to the weeklies just because this one's been in a clear downtrend. I don't know, 5-6 weeks in a row. Was up 1 week like 2 bits, right? 25 cents that week, and just continued its onslaught on the way down. So these things just can't be bought. I know they had a big run, Solar Edge and Enphase, they have massive runs, but it's the party's over for the solar stocks. So there's just holding into earnings is just it's worse than a coin flip. MXL is another one that's not in the solar. It's a semiconductor stock. They reported and just got slammed 22%. That'll hurt your portfolio. Sanofi reported Thursday, I believe, and then Friday morning, or maybe Friday morning, down 20%. I mean, that's just a brutal move. It'll ruin your day. So you just got to stay out of these earnings calls. They're killing people. They had a really good earnings report. It was up like 12% in pre-market, and that's why you can't trust pre-market. It opened up and had to be halted. There's so many people wanting out of this thing. They couldn't get out fast enough, and it was down on Thursday again, and then Friday had this little mini inside day move, but that looks terrible. Anyway, my point is stay away from earnings calls, man. You just get your head ripped off. For every one, that goes up like a Deckers, there's 20 that are going to get slammed. I'm going to go to the retail. Why not? Since I mentioned Deckers, they had a great day on Friday. Strong report. Their HOKA and UGG brand, over, I don't want to say 30%, year over year sales. Here's you see over $1 billion in revenue, 25% increase. Their Teva brand not doing that great, but you could see their sales and earnings increase, and that's why this stock is doing well. Hell of a balance sheet, return on equity, cash flow, no debt. The up down volume is only 0.8, but you can see over time, Deckers has been a monster over time. Gosh, just keep this one in your portfolio. And I think you've done pretty well over time. But anyway, just wanted to point out, strong day. This is one that you don't ignore. 19% move with 377% above average daily volume. So that one looks good. AEO, American Eagle Outfitters. They don't report until December 13th, but this one's showing relative strength. And if you look at the weekly chart, this is a weekly review. You can see the big cup with handle. Maybe the institutions haven't figured this one out yet. It can't have a stock going up in this environment. Come on. And the other one was Abercrombie and Fitch, which has broken out a couple times. You could see a breakout on earnings, and now they have earnings at the end of November. So this one's trending higher with its 21, traded down to its 21 on Friday, but you can see the relative strength line in this stock. Real strong. This one, the up down volume 1.4, so much better. And beta 1.43. So Abercrombie and Fitch is pretty live stock. Let me see. Let's go to some other stocks here that I'm just going to point out. I'm not going to opine on these much. This is a recent IPO. I think they do ATMs, install ATMs. Recent IPO that is holding up. That's the best you could say, I guess. In this tape, that's pretty darn good. FRO is another one. What I'm seeing here, this is a lot like 2022, where the technology stocks are selling off. These oil and gas stocks are showing strength. I'm just going to point them out. I'm not, into, pointing out buy points or anything like that. You can see for yourself, this is set up in a base here. It's a weekly chart, so I got to go to the weekly. It's a weekly review, so you got to go to the weekly chart. There's your, third stage flat base pattern. Looks pretty good. EDU is another one that has been trading really well. It's getting supported here at its 21, broke out, pulled back to the 50 one time, now trading with its 21. So EDU looks really good. INSW is another one in the oil and gas space, transportation pipeline. And you can see this cup with handle pattern. This one looks strong. This is actually one that I bought recently because I had to sell Lilly and NVO, and I had to own something, so I bought this one. So anyway, there you go. Full disclosure. TNK, another pipeline. This has got this consolidation here and trading higher. This one looks good as well. You can see that long consolidation there, about 33 weeks. That could appear on a watch list or ready list somewhere soon near you. STNG, another one in the pipeline. I don't know how many of these pipeline stocks you want to own, but you can see this big cup with handle pattern now, kind of broke out here on Friday. Nice move of more than 5%. And you can see on the weekly here, Scorpio Tankers, a nice 35-week base. That one looks good to me too. Let me see, Tidewater and Weatherford have been showing these forever and a day. Just treading water. This is a field services stock, and then Weatherford is an equipment, oil and gas equipment stock. Just trading well. Anything above the 50 in this tape is trading well. A couple more stocks I'm just going to show that are just showing strength. That's all. is LRN. This is Stride, Commercial Services Education. That one is showing strength. You can see the gap, not to be ignored, Dan. Big move here with volume. So good for those longs there in that stock. Another one, PRDO, is in the commercial services education space as well. You can see the breakout here and just trending higher. So that one looks good. Some of the more popular names here, CrowdStrike, had it ran up to 180. I held this thing from 160 to 180, but I just sold it because of the market weakness. I don't like losing money. I don't like seeing my profits dwindle, but this one still looks good, holding up. And then OLLI. OLLI's another one. This is retail discount variety. Think something like that. Dollar General and Dollar Tree. Those stocks would do good in a inflationary or the tough environment that we're in right now. This has got an 8-week flat base, second stage. So all these looks pretty good too. I wanted to point out that in a market like this, you're going to see a lot of stocks that are beaten down. And if we do get a rally, like a short cover rally, the beaten down stocks are the ones that move a lot. You can see CROX here. It took forever. This thing has sold off on earnings twice in a row. They have earnings due on a Thursday again, like everybody else, it seems. But it took forever, made this low and it's taking forever, rallied up to the 50 and got pushed down. So that looked like a good short there, but I wouldn't do much ahead of the earnings. But if we have a short cover rally, these beaten down names like CROX and ROKU have the tendency to like make big moves as the shorts, cover their bets and, buy at lower prices and just take profits essentially. AFRM is another one, beaten down 25 to 16. Maybe if we have a short cover rally, that would be one to long. Upstart, how that one moves. This one's way beaten down, with a heavy short interest. And Carvana, I think that's the Carvana is the poster stock for short interest squeezes. And so maybe if we get a short cover rally, some of those stocks can move. Anyway, that's it for me this week, except for I have one more thing. I wanted to point out once again that Stan Druckenmiller and Lee Cooperman have talked about this 16-year window. The Nasdaq went from 2000 to 2015 to 15 years before it made a new high. And this is the 66 to 82 window of the Dow Jones Industrial Average, where it could not sustain new highs. And Druckenmiller and Cooperman think that we're in this type of an environment, where the government has spent so much darn money. We have incurred so much debt. It's going to be inflationary. It's going to be just a tough market to sustain new highs. Yeah, we could rally up, as it did several times to new highs, but it couldn't make new highs and keep trading higher. It got pushed down. I'm sure if we went to 16,002 on the NASDAQ, nobody would complain. But I think a market like this, it is conducive to stock picking. There's, it's not going to be a rising tide that lifts all boats. It's going to be, just a few stocks that are trading well, and you're going to have to be a good stock picker. But, even when the NASDAQ is trading like it is now, even a stock picker is not going to do well in a market like this. Because it's just trading lower every day and every week. So you got to wait for the market to improve. There will be stocks. We know that the good strong stocks in this environment were like McDonald's and Lockheed Martin, and there were a lot of WD-40. There were stocks that did well in this 16-year window, but it's just the index did not make new highs. So a good stock picker will do well. And once the market reverses and gets back in an uptrend, but right now we're in a downtrend, you have to be mindful. You have to respect the risk in the market. You cannot fight the tape. You can't fight the institutions when they're selling. You just got to get out of their way or you're going to get hurt. We're on red. Until, we see a reversal and a follow through day and market uptrending. You just got to be careful out there, folks. Thank you for watching. Peace, love, happiness, never give up.